We're on the cusp of a significant surge in the crypto market, and Bitcoin is leading the charge. In about 8 weeks, history suggests that up to 95% of all Bitcoin investors could be reaping profits as long as they stick to their investments. The importance of this information can't be understated. When you look at the top 25 ETFs of all time, 4 are Bitcoin ETFs. That includes big names like BlackRock, Fidelity, ARK Invest, and Bitwise. They're part of the most exceptional ETFs ever, even though they've only been on the market for a month. This amazing achievement is not an isolated incident.
ETFs have long democratized investing. They started with S&P 500 exposure 30 years ago. 20 years ago, they brought gold to market. This is another, point of evolution and another point of maturity for the ETF market, bringing Bitcoin to the broadest range of investors in an equitable and transparent fashion.
The data covers over 5,535 ETFs launched in the last 30 years, making the success of these Bitcoin ETFs even more extraordinary. Notably, BlackRock and Fidelity are in a class of their own, each commanding over $3 billion, with ARK Invest and Bitwise not far behind on the list. Fast forward to today, and Bitcoin ETFs continue to perform exceptionally well.
The tracking has been really remarkable. We've seen the Bitcoin ETFs really doing a great job of holding very tight bid-ask spreads, tracking the fund's net asset values very tightly, and we've seen a liquidity profile that has been indicative of what we anticipated. We've got a 10-year track record and over 1 million investors and over 20 billion in assets, so we're seeing exactly what we anticipated.
They've drawn in over 400 million today alone, making it the third largest inflow day since Bitcoin ETFs launched. On its first day, Bitcoin ETFs saw inflows of 655 million, followed by 453 million on the 17th. Please take 2 seconds to help us out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keep us motivated to keep making you great content. It's quite a rarity for fresh exchange-traded funds to experience continuous inflows. Take the instance of the original gold ETF, which saw an exceptional performance upon its launch, cementing its status as one of the most triumphant fund introductions ever. In just a month, it enjoyed positive funding for 8 days, countered by a single day of outflows and 11 days, which is a real testament to its appeal. The current ceaseless appetite for Bitcoin ETFs is truly awe-inspiring. Do you remember the insightful tweet that Cathie Wood shared about this phenomenon? Well, it was actually my analysis she was praising. The gold ETF, undoubtedly one of the most successful launches ever, offers a prime example of what could unfold. The Bitcoin ETF is hotter than ever and even outdoes the gold ETF's success story. And though we're still relatively early in Bitcoin ETF's journey, the preliminary pattern mirrors that of the gold ETF, with a significant surge, a cooling off, and a subsequent potential for a massive increase. Bitcoin may well be set to replicate, even surpass, this trajectory. The dynamics of supply and demand for gold ETFs and Bitcoin differ considerably. The surge in demand following the introduction of the gold ETF sparked a corresponding increase in gold mining to augment supply. However, with Bitcoin, there's a twist. Unlike gold, we can't simply mine more Bitcoin to meet the growing demand. Bitcoin's supply flow is in fact scheduled to halve every few years. Now, let's unpack this further. Consider the chart of net Bitcoin ETF flows. The black line represents the total amassed Bitcoin in ETFs to date. Meanwhile, the yellow line shows the daily inflows in the ETF. If you were to juxtapose this with gold's daily ETF inflows, you'd notice a definite upward trend to the right. To put this into perspective, the collective holdings of 9 Bitcoin ETFs, excluding GPTC, have surged past MicroStrategy's stash, which took nearly 2 to 3 years to accumulate, and they've accomplished that feat in just a single month. Just a while ago, BlackRock Fidelity made an intriguing move that signals a big bite into the flourishing market. It's stirring up the U.S. crypto sector, poised to surge remarkably. The stock market is also showing strong performance, with the S&P 500 breaking its personal record by closing over 5,000 for the first time in its history. This tidbit of information is noteworthy because Bitcoin is now easily tradable via exchange-traded funds. This opens a direct gateway into the crypto market, and there's a significant possibility we might see an even tighter correlation to the S&P 500. As the stock market continues to shatter previous records, the Federal Reserve, led by Jerome Powell, is motivated to sustain this trend throughout the election year. Failure to do so could potentially cost him his job. Meanwhile, cryptocurrency prices, such as Bitcoin, are rising rapidly.
With Bitcoin trading at about $51,600 by noon Eastern, earlier in the day it briefly touched $52,000, a level not seen since December 2021.
Unexpectedly, ETFs are a powerful tool for enhancing Bitcoin's brand visibility, something we didn't realize we needed but deeply appreciate now. As we look to the future, anticipation builds for the launch of ethereum ETFs. Financial institutions rooted in traditional practices and Wall Street enthusiasts are poised to embrace this with open arms. Critics, on the other hand, can do little to dampen the excitement. You may regret this oversight if Ethereum isn't a significant part of your portfolio. According to one analyst, Bitcoin, Ethereum, and several other high-quality cryptocurrency projects are poised to surpass their current records this year or the next. It's an exciting time for all of us in the world of cryptocurrency here in the US. The market is showing promising signs of exploding, and with it comes a fantastic opportunity for prosperity beyond our wildest dreams. However, a looming challenge could potentially halt this progress. It's the ultimate test for the survival and adoption of crypto on a large scale. Elizabeth Warren's Digital Asset Anti-Money Laundering Act presents a hurdle close to the finish line. Rachel Wolfson, a renowned crypto journalist, had an insightful conversation with Perrianne Boring, the founder and CEO of the Chamber of Digital Commerce. Their primary goal is to push for favorable Bitcoin and crypto guidelines. Perrianne articulated how Elizabeth Warren's proposed legislation could be the death knell for crypto and why her bill must be thwarted. Although at first glance, the bill's statement doesn't explicitly call for the prohibition of cryptocurrencies in the United States, the actual implications could be severe. It categorizes several aspects of the crypto space under the Bank Secrecy Act, imposing the same kind of financial reporting requirements as traditional banking institutions. The bill covers self-hosted wallets, suggesting they should be regulated as standard financial entities. It also stipulates that Bitcoin miners must abide by certain financial reporting criteria. The problem is that Bitcoin miners don't have access to necessary information such as names, addresses, or social security numbers linked to the transactions they verify. Because of this, it would be effectively illegal to operate a Bitcoin mining business in the US. It is essentially a covert ban on crypto. The proposed legislation is officially known as the Digital Asset Anti-Money Laundering Act, or Senate Bill 2669. However, we prefer to call it the Crypto Ban Bill for its potentially dire implications. The buzzing cryptocurrency market sphere is set to explode, and you could be a part of it. Subscribe to our channel and join our community if you want to grow your wealth with crypto. We post a daily update to keep you in the loop about the entire crypto market.